Bulletin about the Chinese parliamentary session beginning in Beijing. The economy, of course, one of the very, very key topics up for discussion, really.
Yeah, the Chinese government like to use this meeting to sort of lay out their economic stall for the year. One key target they've given us is how much they want the economy to grow by, about 7.5%, the target announced by the Chinese premier in Beijing. That's the same target they gave last year, but lower than the actual rate of growth last year, which was 7.7%. But with recent signs showing that some sectors in China are slowing down, the government may in fact have to step in to prop up to get that economic target this year. Kate Moody has more.
A modest growth target for the world's second largest economy. Chinese officials said they expected growth to remain around 7.5% in 2014. That's the same as last year's target and slightly lower than the 7.7% actual growth rate in 2013.
This target is in keeping with our goal of finishing to build a moderately prosperous society in all respects. It will boost market confidence and promote economic structural adjustments.
China's growth used to consistently outstrip official targets as the government maintained a tight grip on the economy. But the last 5 years have seen a slowdown in the once blistering economic growth as the Communist Party turns its attention to reforms. That includes allowing the Chinese currency, the yuan, to float more freely on the markets and making the country more business-friendly for foreign firms. Officials also hope to continue the shift from an export-driven economy to one based more on domestic demand. But analysts warn that as the government tries to reduce its public capital spending, the private sector may not be strong enough to keep the economy on track. Recent manufacturing data indicates factory activity is slowing down. If that continues, overall growth could weaken and shrink below the 7.5% target.
So how is all that news affecting the markets then, Stephen?
Well, investors in both Shanghai and Hong Kong weren't terribly impressed with that news. Shares on both of those indices in the red in trading today. Shareholders also worried about the possible default of a listed company in China, causing some concerns there. The Nikkei, though, and the Kospi and Seoul bouncing back as those fears of a Russian military intervention in Ukraine seem to have subsided for now. Anyway, here in Europe, a generally negative open on the markets. You can see the FTSE 100, CAC 40 and DAX all in negative territory. Germany still about 1% lower, despite those big gains we saw yesterday. Still about 1% lower than it was before the weekend because of those really big falls that we saw on Monday over the markets, over those fears of Ukraine and Russia. The shares are actually down, that figure a little bit out of date. That shares are actually down by 1.4%. This after the huge falls that we saw on the stock market earlier this week.
Lots of companies news around today. Which bits of them have caught your eye?
I'm going to start with the world's second largest retailer, Carrefour, which has seen its profits boosted by improved sales here in France. The company's reported net profits of almost 1.3 billion euros for 2013, up slightly on the previous year. Like-for-like operating income at Carrefour's French stores was up by 30%, though, as the company cut prices in an effort to increase sales. Adidas has warned that currency fluctuations will hurt its earnings in 2014. The sportswear brand announced lower than expected operating profits of 45 million euros for last year. That translated into a net loss of 10 million for the firm. And a Canadian bank specialising in bitcoins is closed after reporting that some $600,000 worth of the virtual currency had been stolen from its online vault. Flexcoin says the theft took place on Sunday and it doesn't have the means to recover from the loss. The closure comes after one of the biggest Bitcoin exchanges, Mt. Gox, filed for bankruptcy protection after losing Bitcoins worth at least $300 million.
Is that all? Now then, finally, if you're watching this time yesterday, I got my wallet out. The reason where we were talking about the cost of living in various cities, and Stephen's been looking at how far $1 million goes.
Not terribly is the short answer.
Really?
This is data put together. It's information that comes from the property consultancy Knight Frank, compiled by the Wall Street Journal, showing the space of property that you could buy in various cities for $1 million. Yeah. The smallest space that you can buy is just 15 meters squared. For $1 million.
Wow.
Following that was Paris and London. London was coming in second on that ranking. And the difference that you can see between Paris and New York is pretty amazing as well. Incredibly, I can tell you, it's only about 44 metres squared you can buy for $1 million worth here in Paris. New York is slightly less than that. In Cape Town, though, much better value there, over 200 million 200 square meters that you can buy for $1 million. Prices up the highest in Beijing last year, as it happened. Perhaps we should be thinking about moving, Stuart,
to Cape Town.
If easier to
if
buy.
you fancy a lot of space, Cape Town is obviously the place to be. All right, Stephen, thanks very much. Stephen with Business at this time, of course, every day on France 24. Going to have a look at what's happening around the world newspaper-wise. Anyway, tensions, of course, between Russia and the West over Ukraine continuing to be the lead.